Joining us now is Wells Fargo senior global market strategist Scott Wren, along with our senior markets commentator Mike Santoli. We asked him to come back on set. He did
it. Yeah.
Yeah. I'm going to start with you on this one. And we touched on it at the top of the show, but the fact that you had the largest options expiration in history signals what about this market?
Well, first of all, just on a basic level, it signals that the size of the market is bigger than it's ever been, and therefore all the derivatives activity around it are very dramatic. But what it could mean is often once you sweep away all those options that are either expiring or getting offset, it's a massive volume day. There's index rebalancing going on. So you have a lot of kind of clearing of the decks that can happen here. And perhaps it frees the indexes to kind of move a little bit more away from some of these kind of round number clusters of exposure. I think a lot of folks were saying 6,800 was really sticky over the last couple of days. I don't think it's necessarily directionally that relevant, except, again, I think we're getting cleaner positioning at this point, especially also because so many of the high momentum stocks have come off the boil, and that sort of reset positioning for a lot of these, a lot of institutions. And what that all can mean is, you know, maybe the market has a little bit of a clearer path ahead. It could be bullish if, in fact, we've essentially gone sideways for 2 months and people are no longer overextended.
Scott, what do you think of this market here, and how would you be positioning in light of that?
Well, you know, Morgan, first on this massive options expiration, I think, you know, over the last few decades, I mean, people don't wait for the last minute to do these options like they used to, especially, you know, on what is normally, you know, thinly traded days here around the holidays. So I was a little surprised the market there wasn't much back and forth today, but, you know, the traders and everybody else, they're squaring up and doing the things they need to do, you know, well in advance of that. Now, as far as the market goes, you know, really we're ahead right now of the midpoint of our year-end target range that we've had out there. It feels like the market wants to go higher. I wouldn't be surprised at all if it did. And, you know, as far as the rotation goes, you know, we've back in August, we took communication services from an overweight to an even weight. About 4 or 5 weeks ago, we took information technology from an overweight to an even weight. And so we trimmed back a little bit there. You know, you're still carrying a huge load. I mean, that's almost 50% of the market cap of the S&P 500. We've been buying financials with the funds we've trimmed from there. We've been buying financials. We've been buying utilities. We've been buying industrials. So, you know, we're still in the AI theme. But we're trying to do it from a little bit different angle, John.
Okay. Scott, thanks. Mike, this is a year, looking back on 2025, that the supposed smart money got it wrong. The institutions started betting against the market, if I recall. Retail investors in risky stocks got rewarded, buying the dip, et cetera, except arguably in Bitcoin. I think we're almost exactly flat with 12 months ago right now there. How does that set us up kind of attitudinally, emotionally in the market for next year?
I've been trying to puzzle over this as to whether, in fact, we've loosened up the linkages between Bitcoin and the overall performance of the market. I mean, that's been the case. NASDAQ used to track it, hasn't in this last downturn with Bitcoin. I would also argue that the buying of the dip by retail after this 5% pullback that started in October was not as aggressive as it was in prior episodes when we pulled back and Bitcoin fully participated in it. So it could be that it's blunting that effect a bit. I did note today there was a lot of life. I mean, Bitcoin was up 3%. Of course, it's not been able to get escape velocity out of the 80,000s, but it was up good today. And at the same time, you saw a lot of the speculative stuff running. So the meme stock ETF was up 10%, as I pointed out, and a lot of the stuff that's sort of like kind of on the fringes of the AI trade and all the rest of it. So it's still there. There's still life in that trade. And by the way, talking about the options expirations, that's mostly how things are executed. If you look at the options volume that's sourced in retail, it just goes up constantly. And also the assets in leveraged ETFs relative to those that bet against the market are at an all-time high. So people are participating even if it's not in exactly the same way.